Okay, so 28th of May, first day of a shortened trading week. Let's get to the charts. Well, I want to start with the one that gets me interested the most. It still is BTC, forming this very nice and well-defined consolidation near the absolute highs of the previous cycle. Let's take a look at that. There it goes. And as I've mentioned before, during my observations, I noticed that when BTC breaks out to the upside from the absolute highs of the cycle, usually it gets this nice period of a very rapid price appreciation. This is how it looked here. This is how it looked here. And God only knows how it's going to look here. My initial thoughts on this is are like this, that with each cycle we get more and more participants on board. BTC is not I think with the which geeky guys, IT guys like to play. It's a very well defined, well-known institutional asset backed by BlackRock and lots of others. And the more the people and organizations are in this, the less, the more efficiently it is priced. So my own expectation here is quite moderate. I'm not. I don't expect it to appreciate into like in times. I'm not expecting hundreds of percents, but maybe a run worth of 20-30% could be quite reasonable from here. But once again, I'm not the one with the crystal ball. Everything could happen. The most important thing is to buy it right. And right now we're getting sort of this mixed signals, because it tried to break out yesterday on Monday during the holidays in the States and immediately squatted. And right now it's sort of not very well defined. Let's phrase it this way. Ideally, of course, it will break this downtrend line and spend some more time here, and after that break out to the upside. Quite likely, but it also could go here, undercut these lows, maybe even undercut this 50-day moving average, and to shake out people once again, and after that do the following setup somewhere here and break out to the upside. In my opinion, it's definitely worth trying to get on board with this, because it is one of the mostly well-defined charts in this market. With that being said, let's switch to the ETH. Well, quite similar. This one always was the most volatile one among the top tier cryptocurrencies. So actually, with ETH, relevance of technical analysis is a bit less as it is with the BTC, because it's not quite as popular with institutions yet as BTC is. So that's why you see these wild price swings. usually we don't like to see these wedging up price patterns, but with ETH you can expect everything, anything, and it could just go actually. But if we want to be consistent with the method, the most optimal buy point will be after a bit of shakeout, maybe here, maybe undercut these lows in a similar fashion with how it could go in the BTC, and after that to the upside. So yeah, meme coins. Actually, we've discussed when we've discussed this pullback, it was quite viable if you are okay with volatility in the range of like 9%, 8%. If that's okay for you, you could buy it there. Actually, you could. And Solana, a bit weaker price behavior in relation to ETH, but a bit nicer overall in my opinion. Actually, you could consider it as a buy point, this area maybe when it clears it, to start some accumulation in hope of further consolidation and continued uptrend. So okay, that's it with cryptocurrencies. The most interesting asset class at the moment, in my opinion. Now let's switch to the stocks, and with the stocks it's not that rosy at all, because during the previous week we sold that correction, which is quite a bit overdue in my opinion. DIA took the hit. Nasdaq not so much, actually continues to grind to the upside to frustrate investors and traders. And SPY is sort of in the middle between the DIA and QQQ. And all of this is because of one stock. Guess which one? We will see it soon. Volatility is curling to upside here. It could point to furthering of this correction. And actually, as you can see, rates start to look quite menacing here, because they weathered this this retreat, this pressure, and now are sort of consolidating and looking quite constructive actually. So that definitely puts some additional pressure on equities right now. Not so much for cryptos. Let's switch to stocks. Yeah, it's appropriate to mention that, of course, given the situation in BTC, IBIT could be worth a look. As I've said, it's that situation where sort of flippening happens, because stock market is so much larger than the native on-chain market for cryptocurrencies, and I think that the fate of BTC in this account is being decided here in this chart, not the regional chart anymore. So looks quite nice in my opinion, and the risk is quite manageable too. It's like 5%, 4.5%, very conservative. And we also see an inside day, this subsequent inside days, 1, 2, 3, and it could eventually resolve itself into breakout to the upside here, and this also is potentially good for the BTC chart, which we have reviewed earlier. And let's of course take the look at the stock, not the stock, but the stock. My humble opinion is that these little, actually not so little at all, company is subtracting all the liquidity from the whole market at the moment, because with the exception of this, there is not so much constructive action actually, and the market is very, very fragmented. I'll show you some charts in a bit. If my memory serves me right, there should be a 10-to-1 split in this, so NVIDIA should be priced around 100 or 110 soon. This is the first sign, actually. This is often considered a sign of late stage price action, because why do institutions need to make the stock cheaper? Oh, it's easy to make it more affordable for the small guy. And the small guy, the trader, the retail investor is needed when it's time to provide liquidity for the smart guy to cash out. So usually splits, maybe not the first one, and in this case not even the second or the third, but the splits are not considered good for the stock, especially with this kind of stock, the institutional growth leader, a very, very rare and valuable breed of a stock. And the second thing to keep in mind are these gaps. These gaps often precede tops. Actually, you can see some examples here. Here is the first gap, here is the second one, and not so long after that we saw this large distribution day when the price engulfed a couple of previous days, and the volume was record, and it foreshadowed this consolidation. It was enough to stop this ascent of price. And sometimes days like these do not start consolidations. They actually start tops and eventual reversals in price. And stocks like these often provide good shorting opportunities, as good as it gets maybe in the world of shorting stocks. With the exception of that, there is not much to be traded actually. I got stopped out of this today. This was my buy point during the previous week. Didn't work out. Just when it is supposed to gain traction and momentum to the upside, the opposite happens. That means that institutions are not willing to chase these stocks, and actually this stock and many other stocks as well. Maybe something like DKNG. What else can I show you? Something like these, RNA, maybe something like this, QFIN. Very, very common behavior, with the exception of NVDA, maybe a couple of other stocks related to semiconductor space. And when we leave this space, we see very similar price pictures almost everywhere. So what else should we talk about? I think this one is quite noticeable too. This wedging could have been resolved into further consolidation and breakout to the upside, but instead of that, we got this engulfing and this maybe shakeout, or maybe not. Maybe it's going to be even a bit worse than that in this kind of market, especially if we will see excuse me, further spike in volatility. And to finalize our discussion, I think it could be worth to take these on your radar. The other Bitcoin stocks in this market, such as MSTR, Coin. What was the third one? Don't remember. This one could get some boost, given the fact that BTC is strong, and of course the IBIT is quite strong too. All right. Wish you great trading. Stay tuned.